Hey, what's up everybody? Jesse here, mortgage broker with Home Loans of Idaho. And today I bring you one of the top questions potential home buyers have when they are shopping for a loan. So we hear all about the different loan programs that are available, down payments, interest rates, mortgage insurance, and all this different stuff. But here's the one question that you want to ask. Which type of loan program is best for my situation? So this is going to help determine if you're working with a salesperson that's just there to get an application into the system and move you on down the pipeline, or if you're working with a true mortgage professional. And remember, we work for you. In my opinion, a lot of people in our industry kind of forget about that. And we've gotten so jaded with do this, do that, and just moving the process forward for the client. And it's all within good intentions most of the time. But when I talk to clients that are shopping around, some of the questions or concerns that they bring up kind of gives me that feeling from time to time is people in our profession forget that we work for you. And we're here to provide you value on getting you aligned with the best mortgage, the best house, getting things set for you and your future as a homeowner, and setting you on the right path. So what we do differently in many cases here is I like to focus and tailor the loan to your financial situation. And what does that mean for you is I don't care on paper, I don't care that we can get you pre-approved for an $800,000 loan, okay? So one of the questions that I ask up front is, realistically with the times, what would you like to see your mortgage payments at? Like, what is your ceiling, okay? And then that way, if you come to me and say, hey, the line in the sand is no more than $2,500 a month, including taxes and insurance. I just want to be able to write a check, send it to the mortgage company, and that takes care of everything. And what that allows me to do is I can go back in and I can structure the loan around a $2,500 payment. That way I can come back to you and say, okay, with your down payment, your credit score, and all the stuff that is pertaining to your individual file, I can come back and say, you're pre-qualified for, a $350,000 home or a $375,000 home. And then what that allows us to do is create a starting point. So that starting point of a $375,000 home with a $2,500 mortgage payment, we can then start to take apart the market and look at the areas that are going to best fit your needs. So if you are looking to buy a home in Emmett or Kuna or Boise or Nampa, wherever these are, you can start searching or have your real estate agent start searching those cities for that price point. And then you can kind of back into this process of, here's a list, there's 10 homes at $375. And then you can go through and say, okay, how many bedrooms does it have? How many bathrooms does it have? And you can kind of cast your net wider to start. And so you can see what is out there on the market at that price point. And then you can start to finite this process where you can tell your real estate agent, hey, we need this many bedrooms and this many bathrooms in the home that we're going to move forward. And so that will allow you to do a process of elimination where if certain cities have those price points, but they don't have many of those bedrooms and bathrooms or the square footage that you need for you or your family, then you can start looking at neighboring cities that may be able to offer those benefits in the home that you need. So that's one of the main questions that you're going to want to ask is, which mortgage is best for me? The second thing that you can start getting into with your mortgage broker is comparing loan programs. So is a conventional loan option with is it going to provide a lower or a better a better monthly mortgage payment than, say, comparing it to an FHA loan? And then you can start to weigh the pros and cons. Here's all the benefits that a conventional loan is going to offer you, and here's some of the cons, like the interest rate's higher, but your private mortgage insurance is lower. The PMI will fall off after so much equity is built up. Where when you look at the costs and the numbers for an FHA loan, the interest rate is usually lower, but the private mortgage insurance is higher. And then you're going to have to deal with other things of, hey, how do I get rid of the PMI? What are the guidelines during the time that you close your loan that you're going to be set to? What are your future plans with the home? How long are you going to stay in the home? Is refinancing going to make sense in the near future, in the next 4 to 7 years or 10 years, depending on if you go with an FHA loan or a conventional loan or a VA loan. VA loans are kind of on the side of their own because they're highly focused on veterans and active military. So that's usually a different conversation. So I'm not leaving our military men and women out of this conversation. That's just going to be for a separate video, because VA loans are very much in their own lane. But they have pros and cons too that we can talk about to kind of look on, do you want to go FHA, VA, or conventional as well? So these are some of the things that you're going to want to ask. Get some loan estimates sent out to you by your mortgage broker so you can have something to print off and look at the pros and cons, because with a lot of the numbers flying around in email, text messages, and conversations, these numbers can get very confusing very quickly on, did my mortgage broker say this, and was it for this loan program or was it for that loan program? So being able to get something printed off so you can look at things side by side and kind of compare apples to oranges is going to give you the benefit of being able to help you make a decision, come up with more questions, and go back to your mortgage broker and say, okay, we had the conversation about A, B, and C yesterday. I got these print offs and I'm looking at this, and then here's a next round of questions. Because the one thing that you need to remember is when this loan closes, you are going to be in that loan for quite some time. Getting a different and changing into a different loan is not easy, nor is it cheap. So refinancing will always cost you more money, and it may not be out of pocket, but the mortgage companies will leverage your equity to cover closing costs. So you want to make sure that you are set and you understand the decisions that you and your mortgage broker are kind of making together and getting you into the right mortgage loan at the beginning. Because again, once it's closed and you got keys in your hands, you want to make sure that that loan is going to serve you in the short term and the long run. And that way you know all the pros and cons as you move forward through the life of your loan. So I'm Jesse. Feel free to, if you have any questions, comment below in the comment section. And always subscribe to my channel. I am a mortgage broker with Home Loans of Idaho. I'm only licensed here in Idaho, and we do focus on conventional FHA and VA loans, both for purchase and refinancing options as well. So I look forward to helping you. Comment and subscribe below. Have a good day.